Dave, 2026,
Yes.
exciting time.
Yes.
We're going to dive into predictions today. A little bit of market update, a little bit of predictions.
Yep.
But this episode should air first or second week of January.
Yeah.
So we are 2026 now. What are we going to see this year? So let's start with some high-level predictions. Talk about kind of wrapping up 2025, what we saw coming into that Q4.
Yep.
And then what are we going to see moving forwards? Q1, Q2, Q3, Q4.
Like it.
And then we can get into the fun stuff. But
Okay.
why don't you kick it off? Kind of let us know, how did your year wrap up?
Yes.
What were you seeing, trends and all of that good stuff?
Yeah. And probably important, like you said, to explain, we're filming right now, end of December.
Yes.
And
so we're coming to you from the past. So,
yes.
Yeah.
And we were just chatting about over the last 2 weeks, for the last, 5 years at least, this is where everything stops. We don't get calls. Everything slows down.
Yeah.
This is the year that's absolutely not happening.
Yeah.
There's so much going on. And this is, so to clarify, this would be on the new client acquisition side. From a listing perspective, I know we're pausing on those, but just anecdotally, we're getting a lot of old clients returning, new clients ready to go.
Yep.
So it's an interesting, like as we enter into 2026, I'm really confident that there's going to be a lot of transactions because you have a buildup of a pipeline of people that want to do transactions and not a lot of inventory because every listing agent is pausing, because why would you list in the last couple of weeks of December?
Yeah. And I guess that's a good question for you. So why is there so many buyers right now in the market? Because like you said, historically, this time of year, right? Holiday season, December, mid-December, end of December, it tends to slow down, right? And in my career, like I don't think I've ever done a deal this time of year, especially leasing and whatnot. And I've actually yesterday we put together like 3 lease deals, and we're like, what's going on?
This is very
and
unheard
people are
of
inquiring
this time of
still,
year.
and it's very interesting. So why do you think that is?
Not speaking to the leasing, but on the acquisition side of things, the deals are so compelling that people are keen. And I also think there was, you saw kind of a pullback price-wise, especially in the multifamily space. And I think a lot of buyers, sophisticated buyers, were watching and just waiting to see what happened, right? Rents were coming down, prices were coming down. So people just got ready, but didn't do anything because it's like, if it continues to go down, we'll probably execute on something a little bit later. Now it seems that the prices have come down. They've stabilized. Rents seem to be stabilized, if not slowly increasing. I mean, terrible time to do leasing, but
are you actually seeing rents increase?
So on quality, so good clarification on really good quality product, it does seem to be increasing slightly from the lows, right? Depending on where we're talking about. But what you're seeing is, even if we just go off the basis that it's stabilized from a price perspective, stabilized from a renting perspective, stabilized. And I think what's happening is people have been waiting, and now they see that, and now they want to start executing because it's not going down. Doesn't seem to be going down anyways. So now, if I were to,
and sorry, but do you see the prices coming down further? Do you think we're at the bottom? That's why I asked this question, because I wanted to talk about this, right? Are we? Okay, sorry, go for it.
No, it was great cue up. So that's how I laugh, because we obviously do so much together. You're ahead of me. I don't think, certainly in Q1, I don't think we're going to see a price reduction. There's too much built up buyer demand. And what you're seeing now, especially in the off-market space, is people are pricing listings properly. Right. So now, you used to go get a deal. I mean, we did a deal, we got almost $1 million off, right? A huge chunk off of the list, but the list is like less relevant to where do the numbers make sense. And now you're seeing 100K off, same size of deal, because agents are ahead of it. They're pricing it properly. You remember there's times we're like, how do you price this? It was so hard. Right?
Or you were chasing the market downwards.
Right?
Now you know.
So those are my thoughts. What are your predictions? And how are you feeling?
I mirror what you're saying, right? I think a lot of action coming into Q4 this year, wrapping up the year. That's not going anywhere. It's going to take a pause for 2 weeks, and we're going to be right back at it. So when this episode comes out in January, it's not like we're throwing Hail Marys into the future here. It's like, no, it's 2 weeks away. Like, we're here. So obviously coming into Q1, I think we're going to have a very strong year. I think a lot of people see that. I have been asking other brokers and realtors, people in the industry, I said, how are you guys feeling this year? Right. And they're like, man, we're busy.
Yeah.
Like everybody seems to be busy right now. So I don't think it's a phenomenon that just happens to be our office, but because I want to talk market and not just what we feel, but what we see in the market as a whole. So anyway, I do think a lot of people are have that mentality. Hey, we're at the bottom of the valley here, right? Where things are not going to get, they might get worse. They might not. I don't think they're going to get worse because it might. And this is what I was going to actually say earlier, which was our underwriting is now in line with the interest rates.
Yeah.
And what I mean by that is when prices were coming down heavily, when we were doing drastic price reductions, it was the cap rates were not beating the interest rates.
Yeah.
So if you were buying, for example, a 4.25 cap, but we are getting an interest rate at 4.75,
doesn't make
that's
sense.
a losing deal.
Yeah, it doesn't make
There's
sense.
no way to make that deal win.
Yep.
Right?
Yep.
Unless you really actively increase that revenue. So what we're seeing now, though, is we're seeing the cap rates are greater than the interest rates, which means these deals are winners. These are going to be profitable deals from day one.
Yeah.
And that's a very generalization.
That's a great metric, though.
But it's what I wanted. It's what I actually came in with today, because I think that's the whole.
Yeah.
That's my whole thought process here. Is okay. We've adjusted. The market has adjusted. The cap rates have adjusted. We're buying at 5 caps, 6 caps, right? 6.5 caps, and it's the interest rates are 4, 3, 3.75, 3.5, 4.5. So everything's making sense now where it sits, and that's why I think we are at the bottom. Unless something drastic happens that we aren't predicting today, I do think we're here, or very darn close to. And sorry, I'll just finish this off. And I don't think we're going to see maybe one more interest rate decrease, right? And that's what I wanted to ask you about, actually, right? Is what do you think about the interest rates? But I think they are going to level off now.
Yeah.
And we're going to see what happens.
It'll be interesting to see. Like if you look, based on when we were releasing this, we're a little late to it, but yesterday the U.S. released their CPI. Their inflation is below where they thought. The poly markets are sort of betting on if they're going to drop rates or not. Seems like they may. The odds of that happening are increasing, which would sort of put us in an interesting position for sort of the same reasons. So I don't disagree if we get some stabilization, but I'm less concerned about the changes of interest rate and bond yield as much as we've returned, to your point, we've returned back to market fundamentals where we didn't for a while, and that was challenging, right? People are, trying to list deals or trying to transact on deals, and you're buying a loser out of the gates, and we obviously underwrite these like crazy and advise people not to do that. So that's a challenging market. This is a market that makes sense. It's a winner from day one, and then you could start adding your increases across the board.
And listen, there's always going to be outliers, right? Because we talk about this a lot, and then I get people that call me and say, Jake, I've looked everywhere. I can't find a freaking deal, man. I don't know what you're talking about. And it's okay. Yeah, you go to realtor.ca, there's going to be some losers in there, some winners, whatever it may be. But I think everybody's come around. Sellers have now come around to reality of where the market is, and things are starting to transact.
And that is just the market educates people. That just takes time. There was times where people were buying it, 3 caps across the board, and sellers are always lagging, and they're like, no, I want that price, and then over time it adjusts. And I know we made that call a while ago, which was you started to see the power of sale prices that were coming out, and we were saying that might actually be the new benchmark under which to kind of assume, based on a bit of a spread from a risk premium point of view, because it's power of sale. But that helped kind of set the tone, the benchmark, and now that's what you're seeing.
And it's interesting. Well, we're going to put some money on it, but we'll see when the market does start to return, right? And again, that might not be next year or even the year after, but when it does start to return or prices start to increase is what I mean, we're going to be sitting here and Dave's going to say, "Oh man, my buyers aren't with the times, right? They need to get they need to start paying more money." So we'll see what happens there. But let's dive into, so that's kind of Q4 2025. So let's dive into 2026. That's why people are here. They want to know what we think. Let's go high level predictions for the entire year. What do you expect this year to look like?
It's challenging. There's a lot of like geopolitical risk, U.S., Venezuela. Like who knows how some of this stuff's going to shake out. So there's a lot of caveats, question marks, and the further out you predict, the less likely those variables come true.
No, and that's why I have fun with this.
Now,
right?
Andrew
and I used to do this all the time.
Yeah,
and it's like,
but like, look, I mean, here's the reality. There were some unshaky, uncertain times. Some of those still exist. And we have a boatload of people that are still out looking, not just us, others. There's a lot of excitement in the commercial space.
Yep.
The concern, of course, is the residential space, which is getting absolutely hammered. We're insulated. It has been my main driver for pushing multifamily because it has sort of a hedge to it from a market perspective. So that's the good news. I love the product. I think it makes a lot of sense. Some of the concerns, population's dwindling. You start looking at sort of where people are moving and, there's a lot of changes. I think we're wildly rich in resources in Canada. And I think if we start to utilize some of those, which there is some rhetoric about, so that would be great. I think overall we're going to be in a good position. But we naturally have a set point and a safety built into kind of Canada in general. And I just don't foresee us getting too much lower unless some outlier happens. Right. In which case, me, if something like that happens, I'm going to be even more bullish to do more stuff and deploy more money.
Opportunity, right? We see what happens. We flex. We decide, hey, here's the new path. This is what we have to do to make this work, and we go down that, right? So it's. I always think, as real estate is a great investment, right? Fundamentally.
Oh, for sure.
So that's good. Again, my predictions coming into 2026. Again, prefacing, outside of something happening that we can't foresee right now, or more stuff from the States with tariffs or whatnot, I don't know, whatever. But I do see the market stabilizing. I don't think 2026 is going to be a year for huge growth, right?
And when you say that, what do you mean, huge growth?
Huge growth means huge growth in value in the market.
Got it.
Like, I don't see these building values going back to 4 caps.
Got it. Okay.
Right.
Yes,
and I know a lot of people out there are hoping and praying and have their fingers crossed for that. So I'm just looking at it saying this is what I'm looking at. So multifam, I think Dave covered that very well. But let's talk about the other asset classes, right? So let's talk development for a second, right? Because development was non-existent this year. Nobody was buying. Nobody was buying. Right. The guys that even wanted to buy couldn't buy because they're going, I don't know what it's worth.
Yes.
Right. Yes. So I think development, we're going to see that continue into 2026. I don't see development turning around because we're not building condos. Yeah. That's most of what this development is. It's high-rise condo build. Yeah. So I do think more people, knowing where the market is now, I think more developers are going to pivot away from condo product and they're going to start doing more purpose-built rental.
Yeah, we're seeing a lot of that, right?
So it started to happen this year, right? 24, everybody said survive till 25. Let's see what happens in 25. 25's come and gone. Nothing's changed. It's gotten worse. So 2026 is here now, and I think the developers are going to say, okay, well, we can't just keep waiting. We can't just sit here and wait and wait and wait. So can we pivot these condo projects into rental projects? Just break ground, start going for it, right? I don't think condo products coming back anytime soon. It's completely saturated. Yeah. Low rise, I do see low rise construction. I think that will start and
seeing a little bit of that, right? Now.
There's let's call it townhouses, single family duplexes, 2 stories, whatever it may be. I don't think that's going anywhere. It's definitely slowed down. I don't think it's going to be a rapidly growing sector, but I do think those projects will start. So I think, again, 26 is going to be in for a tough time for development unless we can go purpose-built rental product with it. Very quickly, we'll just cover off the other sectors. So let's talk industrial quickly. Industrial, I think we're going to see a declining market for industrial. We've already seen that coming into 25.
Is that because it was so hot for a while?
It was industrial was so hot. We jumped, in 5 years, from $6 a square foot for industrial to $20 a square foot.
That's wild.
Right? I started selling real estate, we were doing industrial deals. It was like $5 a foot, right? It was just like, that's a warehouse. It's what it is, right? And all of a sudden it became premium real estate and was being charged $20, $22 a square foot. So we're going to see that continue to decline. That really is heavily weighed on the tariffs and the uncertainty in the market, right? Because these are companies that do shipping and logistics all over North America.
It's global.
Right? And it's killing them to keep these warehouses. Retail, I think retail is going to be very strong. It really hasn't dipped.
Yeah, that was surprising when you and I were chatting. Yeah. Like I feel like that's a pretty good indicator of the economy in general, and it's just booming, and the spaces are being filled, and there's a lot going on, and that's great. That is great.
You think about it, right? Like retail is neighborhood commercial, right? Yeah. It's where I get my groceries. It's where you go to the doctors. It's where you go to the whatever. I'm just thinking of the one plaza by my house, right? It's got like a veterinarian. It's got a Vietnamese pho place that I love, and it's got a grocery store.
Yeah, that's everyone. You painted a good picture,
right? So it's like, and that's not going anywhere because we still need those. Those are fundamental uses. Those are things we need. Mm-hmm. So we really haven't seen that dip too much. Obviously, again, we've seen a slight inflation in cap rates there, just because of the interest rates, right? Again, your cap rate should be higher than your interest rate.
Yeah.
Right. So that's where we've seen the flex there is more about what the cost of debt is rather than like core market issues in that sector. So again, retail, very strong. Highly recommend people look into it, even if we're looking at mixed use. A little bit of foreshadowing there for our next episode.
I do enjoy a good solid mixed use property. Yeah.
I ask people to look into that more, right? Yeah. Consider commercial tenants. It's not as scary as it seems. Sometimes res is more scary than commercial tenants, right?
Yeah. So it's just understanding it, right? Like it's funny, the people that have commercial, once you pass that hurdle, it's like, oh wow, the contract means everything.
Yeah.
What a concept, eh?
Everybody I've sold mixed use to, Dave, has called me back and they're like, man, the commercial tenants are amazing.
Yeah.
Like they shovel their own snow.
Well, I've got 2 commercial tenants and then residential upstairs, and it's wonderful.
It's great.
They're amazing.
It's really, really great.
And even when you hear from them, it's, hey, could we do this? Could we do that? Where sometimes on the residential side,
you're doing this,
you're doing that. Yeah.
Anyhow, so kind of blending those two is what I'm kind of excited for. Again, diversify your portfolio. Buy a multifam building with a commercial unit on the main floor. Right? You can still squeak into CMHC. We've talked about that 100 times. Yeah. So anyway, I don't want to get into the weeds there, but that really covers off asset classes. Office, I guess we didn't cover. Office is kind of, I think downtown office is still hurting big time. That's not going to change. Suburban office is doing okay. Again, prices have adjusted quite a bit. But suburban office, we're finding a lot of the big companies from Toronto are saying, I'd rather grab instead of 10,000 square feet downtown Toronto, why don't we grab 5,000 in the West End, 5,000 in the East End, run 2 offices, and it's still more affordable than having 10,000 downtown. So that's kind of where we're at that. I don't see big changes in the future for office space as of right now. But I think that kind of wraps up like the asset classes and what we're looking at. So what are you excited for in 2026, Dave?
Yeah, I mean, look, this is the way I see it is, to your point, which I agree with, I don't see the market seeing extreme growth. And why that would in any way excite me is right now, the opportunities, the good ones are really, really good. I mean, we laugh because we're client first, of course. So if we see a good deal, we send it to clients. Every good deal we see is getting gobbled up. And it's like, man, we were getting itched to buy something because these deals keep looking better. So if that's the case, really good opportunity for a lot of our clients. Awesome. If the market goes down, there's going to be even better opportunity, right? So that's truly what excites me is because we seem to be at this point, you're going to be buying these deals with an outlook of at least 5 years. I mean, that's the minimum for a multi, probably 10. Most of our people are multi-generational. It's like, boy, you're either at the bottom, near the bottom, you're certainly not near the top. What an amazing time to buy. Like it's going to be a really stellar year for the people that transact and just hold these good quality properties.
So what I'm getting, you're just excited to get into 2026, get to work.
Yeah,
right?
Good summary.
You just want to get to work is basically what I'm hearing. Okay, cool.
Yeah, what about you? What excites you?
Yeah, honestly, coming into 26, again, very similar. I think there's a lot of action in the market. I'm excited for that. I want to get to work as well. We're going to see, I'm excited to see where the market trends go in 26, right? I'm excited to see where Canada goes in 26, right? It's going to be a big year, right? We got the new prime minister. He's got the budget. Let's see what that happens, right? So I think a lot of things are happening. We've come out of a very turmoil heavy time with a lot of uncertainty, and I'm really hoping we can get back to some certainty, some norm. And I think that's going to start in 26. I don't think it's going to be anywhere completely stabilized, but I'm excited to see that, honestly, just to see what happens with everything and how it develops.
We need a catchphrase for 26. Is what was it? Survive 25, you said, which is hilarious. So we'll come up with a good one for next episode.
Yeah, somebody said it to me the other day. We laughed. It was 26 pickup sticks.
we can beat it. We can beat it on the next one.
That was pretty good. Anything else you want to add there, Dave?
No.
For 26, what do we got?
No, I think the same thing. If you made it this far, thank you. Like, subscribe, fill out the form. More and more. I mean, more now than ever, I think you're going to see a trend in the beginning of the year in off market.
Yes.
We saw a lot of stuff starting at the midway point of the year coming out on market. And I think that was just a lack of understanding of how to price. So better to put it out. I think because there's some normalcy, stabilization, we're going to see a lot.
Really good point. And I'll just wrap up by saying, and I can completely back that up because we were pricing stuff at $1 all year long because we're going, I
don't know,
catching whatever. Right? Coming into 26, I'm much more confident pricing with a dollar amount and holding to that dollar amount, knowing that, hey, I've underwritten this deal. I'm confident we can get this deal done and be firm with that number. So very excited for that. Thanks for sticking around, guys. Hopefully there was some tidbits in here you can take and we look forward to speaking with all of you. What I would really love to see is, please leave us a comment. I know we get some comments, but I'd love to know, what do you guys want to see in 26, right? Where can we develop this show? Obviously, we're going to stick to the basics, which is reviewing our deals, showing you guys how we underwrite. We'll talk about market updates. We're going to start bringing in some guests.
Yeah, that was the comment that seems to be the thread, is we'd like some guests to come in and spice things up. So we're definitely
and do the same thing with them, right? Look at deals with the guests and say, how would you look at this? What can we do? So it's going to be exciting. So we're adding a couple things to the show, but anything else you guys want to hear, see us talk about, throw it in the comments. We'll make sure we do an episode on it, and we'll see you next week.
Awesome.